Hello, everyone. Welcome to Clear Outlook Session 2. I hope by the end of this session, you'll have a complete analysis of Nifty 50 for today and stocks to watch out for. Let me begin by sharing my screen and we'll look at the global news. There we go. So, the biggest major news is that the US has reimposed a blockade on Iran's ports. That means nothing can go in and out of Iran now, which has caused crude oil to spike. So let me just show you the crude oil chart prices. So yesterday it had opened around 74 and it had cooled off to 72, and now it's spiked back up to 78. And we can even look at Brent oil, as some people were saying Brent oil is better to look at. So here we have Brent oil futures. So like you see, it's up like about 9% since the weekend. So that's quite a worrying sign for the markets. Now let's come back and look at Nifty. So let's first go and see the regime for Nifty. So the regime has now become from a bull regime to a mixed regime because of all this news. Even though the major direction was upwards, now it might be range bound again. The volatility forecast is expected to be lower. The at the money volatility is super high for tomorrow's expiry or today's expiry, depending on when you're watching this. And so that would tell me that do not buy any options for the expiry for today, as option buying will be very difficult and option selling is favored right now. But that also within credit spreads would be better. So you can see the Nifty PCR is quite high, which is neutral to bearish. Means a lot of puts have been written, and if there are any adverse news like this naval buildup, that could really cause a cascade. So we have to be careful. Now let's look at the option chain for Nifty. So we come here. So yesterday people had got rid of some of their calls, and but they were also short puts. So they were like short calls, short puts both. So expecting for maximum decay as expected from the IV. So maybe these put sellers will be under pressure today. Let's see what happens. Now let's look at the levels for Nifty. They should be the same as yesterday. Yeah, they're pretty much the same as yesterday. We have a floor at 23,000 and the ceiling was 24,090 or 100. And again, yesterday we had said that if it stays above the ceiling, we can sell puts, and that worked out well yesterday. There was huge decay in the puts, but now the puts are under pressure, and if it breaks this 23,800, we are a little bit toast. So we have to be careful over here. So the trade plan is if there's a gap down below the ceiling and it sustains below that ceiling in the first 5-10 minutes, you can play for short calls, short puts both. But if it goes back above the ceiling, then we're in trouble. And if it sustains and breaks below 23,800, there's more downside expected. Then now let's come and look at individual stocks for today. Let's go to market signals. We had signals on HCL Tech, Paytm, Bajaj Auto. So let's open one of these chart analyzer. So HCL Tech. So even though HCL signal is coming by, the overall signal is still bearish, but the only thing bullish about HCL Tech is its option flows. Rest, its entire chart is looking really terrible. And the valuations are another attractive part, but the EPS growth is really, really poor. So that's what the market is worried about in this stock. The next stock we can look at is Paytm. So Paytm is a little bit extended from its breakout zone. As I can see, there's a breakout zone either here or here. So currently it's given a hold signal with a confidence of 73, meaning that it's kind of confident it's going to consolidate somewhere here and then make a next move, as seen by the VCP rating of only 2 out of 5. So this is another sign that whenever we give those market signals, you don't take them at face value. You always look at the chart analyzer and fundamentals to confirm the signals. That's all for today. And as usual, please keep your capital safe and happy trading. Thank you.